Live from the New York Stock Exchange, I'm Julia Chatterley. This is First Move, and here is your need to know. Going for green, U.S. stocks set to open higher in what's going to be a key week for trade talks. Now to the hard part. UK Prime Minister Theresa May sells her Brexit deal to the EU, now to the UK public. And ready, steady, shop. U.S. consumers set to spend a record $7.8 billion. Why? Because it's Cyber Monday. Let's make a move. A warm welcome once again to First Move, and the first move for US markets this morning does appear to be higher. Yes, we had a holiday week last week which saw 4% plus losses for these US markets. That's not holding investors back this week. Right now, dipping their toes into the market. The FANG stocks, remember, the likes of Facebook, Amazon, Netflix, all higher pre-market too. Amazon also rally on hopes for a strong Cyber Monday, as I mentioned, down though almost 6% last week. Context is everything. What investors are hoping for this week too is clarity, both on the trade front and from the Federal Reserve here too. We've got Fed Chair Jay Powell speaking on Wednesday, Rich Claridge's Vice speaking on Tuesday. The big event, of course, coming at the back end of this week, the G20. Will we see a sign of thawing between President Xi and President Trump? I think that's going to be a critical determinant of sentiment as well. What else have we got going on? Well, we've got a firmer oil price today too, after a 7% plunge in Friday's session, the worst day in fact for 3 years. Energy, the sector, is the worst performing year to date too, and that is where we are going to begin our drivers this morning. Oil price front and center for the president in particular, tweeting over the weekend that he's got oil prices down, that he hopes the Fed is watching too. Christine Romans joins us now. Christine, great to have you here on this Monday morning. Clearly the Federal Reserve front and focus for investors here, not just for the president, and whether or not they give us any indication of perhaps softening their stance on rate hikes here.
Yeah, we know that the Fed chief has been saying for some time that, the worries of an overheating economy are the biggest concern here. But if you look at some of these lack of inflationary pressures in some parts of the economy, maybe that's not what is really going on here. And when we hear from him on Friday, I'm going to tell you, it's pinnacle this week. You've laid it out very beautifully, Julia. You could have a complete change in sentiment any numbers of these days, Wednesday or Thursday or Friday or over the weekend with G20. So this is kind of a crucial week here. And I think it's interesting that the president is tweeting there about giving himself credit, a big pat on the back, as he often does, for lower oil prices. He knows very well that if he can't look at the stock market as a day-to-day indicator for how great he thinks he's doing, it's going to be gas prices. And gas prices are a real feel economic indicator for millions of Americans, and that's what really matters in the near term for him.
It's quite fascinating, Christine, because we've got the disinflationary impact of lower oil prices, but on the other hand, we've got the inflationary impact of the tariffs and the rising costs of things like clothes and toys, of course, in the United States. Trade will be key this week. What are we expecting from Xi and Trump? Because I feel like there's already a lot of bad news in the price here for markets.
I guess you make a very good point that I guess the risk is that there's a good news surprise, right? Because mostly the conventional wisdom here is that there's not a lot of work that has been done on finding common ground here on trade, that the Chinese won't budge, that the Americans have said again and again that the ball's in their court, but the things the Americans want are not what a communist Chinese system is gonna do. And so that's where you have this impasse. And there's hundreds of areas where the U.S. sees differently than the Chinese on trade. So that's a big risk there. But I will say, there have been a lot of efforts made to talk to the Chinese, but I think in the very end, it's up to Donald J. Trump. The president is the final negotiator here for whatever kind of trade agreement they're going to have, and he's got an awful lot of leverage with hundreds of billions more products that can be taxed, and he can raise. There's 10% tariffs on a whole cadre of Chinese imports. He can jack those up. They're slated to jack up to 25% on January 1st.
Yeah, couldn't agree more, Christine. China's not going to change overnight. President Trump has to decide what is a win here ultimately. Christine Romans, thank you so much for that. Right, let's move on and talk Brexit now too, because Prime Minister Prime Minister May is set to address the UK Parliament very soon as she tries to sell her Brexit deal after EU leaders giving it the green light, of course, over the weekend in that meeting. Nick Robertson is outside Downing Street for us. Nick, she got the green light from the EU. They said, look, she got the best deal that was possible here. Now she has to sell it to her constituencies, to the individual members of the British public here, and they have to go back to their MPs and say, guys, vote for this now. Can she do it?
It's a huge lift. Look, she came out of the box hard and fast here Monday. Cabinet meeting 2.5 hours long, looking at the faces of some of those cabinet ministers as they left. Those that we know have been sort of leaning towards a harder Brexit, unhappy, unsettled by what she's got so far, but are stuck with her. They weren't smiling when they left. Now, within the next hour or so, she goes to Parliament. She'll make the same pitch there. It's the pitch she's been making, the one she got from Brussels. This is the best deal you're going to get. She's going to say things like, if you don't want this deal, then you go back to square one. She's going to say, I've delivered on what the people called for in the referendum, which was to deal with the borders, control of borders, control of money. She'll talk about this close to $500 million a week that she says will be able to be put in the British National Health Service. That's going to be a big sell with the grassroots electorate, but again, that's got to sway the MPs. She'll say we're back in control of laws, we're out of the fisheries deal, out of the common agriculture deal. These are things that people have been unhappy with. But yeah, the persuasion really has to come thick, fast, and effectively. The opposition is against her. Rebels, dozens of them in her own party. The key Northern Irish MPs, the 10 who help her keep her majority, they're against it. The Scottish National Party MPs, 35 of them in Parliament, they're against it. A massive, massive uphill lift right now, Julia.
Yeah, it makes sense. And very quickly, Nick, what about a plan B? I saw some members of the UK press talking about the prospect of a Norwegian-style setup that will come into play if this deal fails. I mean, it's not a plan B, it's a C, D, E, F, G at this stage, but what are we hearing about that?
Sure, look, I mean, look, what the people who are praising this deal are saying, right now this deal could give you that in the future relationship. Of course, the future relationship is yet to be settled, but you still have people who think maybe they can get a second referendum, maybe they can go back to Brussels and get something better. We know what the answer is to that already. Or maybe it's just better to crash out, come out, trade on WTO regulations, be able to make those big deals around the world that they say that this current state of the withdrawal agreement is not going to allow them to do. So, on the face of it, there seem to be a range of issues, but Theresa May is going to shut all of those down and say, look, if you don't do this, then, then effectively you are back to square one, and that's nowhere to start so close to the deadline.
Yeah, 4 months out from Brexit, still at least 6 options on the table. We need to stick to one. Nick Robertson, thank you so much for that. Right, let's move on to our third driver this morning. Cyber Monday. That is the day today, and it's set to make history as the largest US online shopping day ever. $7.8 billion in sales expected, this according to Adobe Analytics. CNN's Claire Sebastian joins me now. Claire, talk to us about where you are today in order to capture the mood of Cyber Monday and talk us through some of these numbers.
Yeah, Julia, I am at the Amazon Fulfillment Center in Robbinsville, New Jersey. We're just about an hour's drive away from you at the New York Stock Exchange, but this is a giant facility. The area that you see behind me is about the size of 28 football fields, 1 million square foot, and this kind of facility is replicated about 110 times over throughout the United States, and of course multiple times around the world. This distribution network is what has helped Amazon capture around half, we expect, of e-commerce sales in the US this year, and really gives them the edge when it comes to Cyber Monday. As you said, we're expecting this day to be a record, about $7.8 billion according to Adobe. That's a 17% increase on last year, and I think we can pull up a chart of those numbers over the last 5 years. This is a day that's really grown exponentially faster, in fact, than Black Friday, as more sales have migrated online. We're looking at close to $8 billion this year. That's about double what we saw 4 years ago. So really, this is becoming a bit of a powerhouse when it comes to online shopping.
Yeah, as you said, it's around half of all e-sales in the United States, but it's still less than 5% of the broader retail market, and we should make that clear, I think, at this stage. Claire, to what extent do you think this is about the strength of the consumer, the confidence of the consumer being willing to spend here, or the sheer quantity of deals, of cut prices? I was bombarded with emails this weekend. Which is it? Which is the driver here?
I think it's a combination of the two, honestly, Julia. I think obviously the US consumer is firing on all cylinders. We're seeing consumer confidence at close to 18-year highs. This is actually the first holiday season when we're getting the full force of the tax cut. Of course, that came in late last year. So there's a lot of good things going on for consumers. Wages are starting to tick up. But we're also not only seeing the number of deals increasing, we're also seeing the creep of both Black Friday and Cyber Monday. They're now lasting more than just those days. Amazon, for example, is extending its deals to December 1st. They say they want to give people more chance to buy them, and I think because of that you might see more people put off their shopping to these kind of 2 weeks, which it's now become. So it's really a combination of all of those factors.
Claire Sebastian, thank you so much for that. Right, let me bring you up to speed with some of the other stories that we are following around the world. A British doctoral student jailed in the United Arab Emirates has been released from prison after he was granted a pardon. A UAE official says Matthew Hedges will likely leave the country sometime today. Hedges was sentenced last week to life in prison for espionage. The United Nations Security Council is set to meet in the coming hours after Ukraine accused Russia of firing on and seizing 3 Ukrainian ships. Russian state media reports that the ships had entered Russian waters illegally. Ukraine calls Russia the aggressor. The US-Mexican border crossing in San Diego is back open. It was closed for several hours on Sunday after hundreds of Central American migrants rushed the border, overwhelming Mexican police. US border agents responded with tear gas. In a tweet, US President Trump threatened to close the border permanently. Now we're going to take a quick break here on First Move, but a lot more to come, including unmasking of Facebook. Britain's Parliament gets hold of secret documents the company tried to hide, and molto bene, investors celebrate as Italy rethinks its controversial budget. But will they make changes? We'll discuss. Stay with First Move. You're watching CNN. Welcome back to First Move. We're live on the floor at the New York Stock Exchange. I'll give you a look, as always, at the US equity market futures this morning, and we are tilting it to the top side, taking back just a small piece of the losses that we saw across the board last week. Tech and energy, the strongest performers pre-market. Energy has been the worst performing S&P sector, down 16% so far in October, so a bounce here I think will be very welcome. As far as currency land is concerned, risk currencies are higher versus the US dollar too. We've got the dollar lower against the UK pound, lower against the euro, and emerging market currencies like the Turkish lira also showing some strength. So a risk positive session pre-market for US futures, and of course that is spilling over into what we're seeing more broadly for risk appetite. European stocks also rallying. The Italian market up the highest, up more than 2.5% on signs of a budget compromise. I daren't ask. Let's bring in Anna Stewart to get the details on this. Anna, how confident are we here that this is an Italian government blink on this budget situation?
It's the closest we've come to a blink, I think, Julia. The market reaction has been pretty impressive this morning. 10-year bond yield hit an 8-week low. And look at some of the Italian bank shares today. We have UniCredit, Intesa Sanpaolo, UBI, BPM, all, as you see, up 5%. In fact, some of those stocks were even higher earlier. FTSE Mid was pushed up, of course, but it is still down 12% on the year. So, you know, it's got some way to bounce back, really. Now, this was all on noises we had over the weekend from the ruling coalition party that suggested that there may be some wiggle room when it comes to the budget deficit. And actually, we heard again this morning from Deputy Prime Minister Matteo Salvini, who essentially said that he cares less about numbers, less about decimal points. He just wants to deliver some of those election promises they have, particularly on welfare. But the decimal point line really reflects the budget deficit, and that's the big sticking point here. Can they reduce it from the planned 2.4% debt to GDP for next year? I think it's looking from Italian media reports like they will bring that down. It's unlikely it will come down to the 0.8% the previous government, were going to stick to, but it might be enough just to break this standoff and to give the EU enough room to be happy with that. There is an Italian cabinet meeting later today, so we'll be keeping an eye out for any noises out of that.
Yes, and those ambitious growth targets too. Anna Stewart, thank you so much for bringing us up to speed on that story. Let's get some more context here. We're now joined by Kit Jukes. He's the Global Head of FX Strategy at Societe Generale, and he's joining us from London. Kit, fantastic to have you on the show. How optimistic are you that the Italians here are going to ease back? Because clearly this is playing into, I think, some of the concerns or the cap that we see on euro strength here.
Look, I don't think it's going to be a game changer in terms of the prospects for fiscal policy in the long run. This is still a fiscal stance that's probably too tight for the economy and not nearly tight enough for the rules around European fiscal policy. But maybe he's found a couple of fig leaves that each side can hide behind to turn around and say we're friends again, and we can put this to bed and focus on other issues. And that, up to a point, is what the markets want.
And if we're talking about the euro versus the dollar here, we can't just talk about what's going on as far as the Europeans are concerned, whether that's softening growth in particular too, but there's also the dollar side to the story here, which clearly is very much tied to some of the immediate risk events like Fed talk this week and, of course, what happens at the G20 and the trade talks there too.
Yeah, there's a lot going on. If you just look at the European side, it's hard to imagine the euro breaking higher against the weaker data we've seen, particularly those PMIs that came out on Friday. Looking forwards at the weekend, the most positive thing that could happen for the euro-dollar rate, for the euro, would probably be an outbreak of harmony between Presidents Xi and Trump down in Buenos Aires. If they could agree that they're going to continue talking, that we're not going to escalate trade wars, that increased tariffs aren't coming quite yet, and see the dollar-yuan rate move down further away from 7, I suspect that's the single most likely thing to unlock the door and get dollar-yuan away from 7 and get euro-dollar back above 114.5 or so. Nothing to do with Europe at all. So there's quite a lot of different moving bits around at the moment.
If you look across asset classes, though, and in particular some of the pressure that we've seen in US stocks, what do you think investors are anticipating? What do you think the market's priced for at this stage? Is it, as you were sort of suggesting there, a continuation but no further escalation of the tensions between the two countries? It just feels to me like there's a lot of bad news here in the price, and any sign of a thawing of relations actually could be seen as pretty positive for investors here.
Yes, I think you've got more of more negativity in the mood. You haven't got as much risk to the Chinese yuan priced in at the moment as you had 2 or 3 weeks ago. Things have just been quiet since then, really. But I think there's a consensus now. You can see it in bond yields that the global economy is slowing. You can see it in oil prices. So inflation expectations are down. Growth forecasts are beginning to roll over. There's a sense the global economic cycle is beginning to roll over. Anything that shows a clear reduction in some of the trade tension would, at least temporarily for markets, be pretty well received, and it would be negative for the dollar, good for risk currencies, all the sort of moves we're trying to get a little bit of this morning.
What about for Jay Powell this week? Because, the president's been clearly very vocal about his dissatisfaction, I think, with Jay Powell, and that's an entirely separate issue. But for investors too, they're worried that Jay Powell will over-tighten, and he's held the line here as far as, continuing to watch the data and actually not being too worried about some of the corrections that we're seeing in asset prices. Do we get any hint this week from Jay Powell that, he continues to watch what's going on, and perhaps if necessary, they will slow down if they need to?
I think, you'll probably get a very balanced message. I think he's a good communicator nearly all of the time. But the reality is, the last round of wage data we saw showed an acceleration that continues. There are wage pressures. The US labor market is getting tighter. There is a little bit of inflation in the system. And they're on course to continue raising rates towards their best guess of a neutral policy stance. I think they'll change their tone pretty markedly when they get close to or too neutral. But I can't see how they can reasonably justify to themselves kind of stopping in their tracks now and saying, oh, look, the stock market's down a little bit, we'd better worry. So I think you may get marginal change in emphasis about balance of risks are still pretty neutral. We should continue normalizing policy, but we don't have to go overboard. It still adds up to interest rates getting a good bit closer to 3% by the middle of next year.
Yeah, it was that comment there that they were a long way from neutral that seemed to spook the market if we go back, 6 weeks. But, Kit, I want to take you over to the UK now and talk about Brexit and Theresa May's efforts to push her deal through Parliament. What are your expectations here? Because there are those that say, look, it may fail on the first vote, then there'll be market pressure, then it will go through on the second vote. Are you one of those that believe ultimately it will get through? Because it feels very challenging at this stage.
Those people who've gone around canvassing and recording the comments of every single MP who's got a view on this, it does look like just an enormous task to get enough non-conservative rebels from the Labour Party to vote in favour of this deal to offset the rebels that are within the Conservative Party. It's very difficult to get that maths to work. So I guess there's a big sense that it'll fail at its first time of asking. But we're not sure what happens next. Do the Europeans show any signs of loosening their stance? Do we get a second vote? And then if the second vote fails, do we get a referendum? What happens? So I still feel as much in the dark as I possibly could about how the next 3 months look.
Yeah, pretty terrifying, I think, we're all concerned. Kit Jukes, thank you so much for joining us on First Move this morning. Right, let's move on, because Facebook once again in the spotlight today. A member of British Parliament obtaining documents that the company had fought to keep private. It refers to a legal case where Facebook is accused of disregarding user privacy. Samuel Burke joins us now. Samuel, this is pretty complicated and goes back a number of years. Talk us through what documents have been obtained and whether or not they come to light.
Julia, we'll make this simple to understand. The most intriguing question is what is in these documents? And perhaps second most intriguing is why doesn't Facebook want us to see them? This all goes back to a lawsuit that's been taking place over in California, a small tech company suing a big tech company, Facebook, saying that they weren't allowed to use user data all of a sudden. That's because Facebook wanted to squash its competition. Now, normally we would be happy if we heard that Facebook wasn't giving away user data, but if they were doing it to squash competition, well, that's how they ended up in court. And this small company got documents about Facebook, which may contain memos from Mark Zuckerberg to his executives. And during that discovery process, they get these documents, but they're not allowed to share them. They're sealed. Now, all of a sudden, the president, the owner of that small tech company, just happened to be here in the UK Parliament, which has been looking at all different aspects of Facebook, knows that they're here and requests those documents. Now those documents are in the hands of Parliament. They're deciding what to do. And the judge back in the United States is left with something very complicated. He had said, do not share these documents, but they may have been compelled to share those documents here in the UK. You've got an international court case, essentially, and you've got the Facebook saga continuing on both sides of the pond, Julia.
Absolutely. And Samuel, everything that I've read so far that suggested information that could be contained in these documents says to me actually that there isn't going to be much new that we don't already know about Facebook, but it just adds insult to injury in light of all the revelations we've just had over the past months as far as Facebook is concerned. Would you agree?
It never looks good when somebody's trying to hide something, but you and I have covered lots of businesses, and we know that pretty much no executive wants to have internal memos leaked. Even if there is nothing to hide, you keep the internal. That's why you write it to each other, not in press releases. But it doesn't look good for Facebook, and of course it comes on the back of so much news. You said over the past month, just over Thanksgiving, we had more revelations, and I think that's what frustrates people, is the fact that Facebook makes a huge press dump right on Thanksgiving week when they know less people will be watching. But we've been watching.
Absolutely, and we will watch that when the market opens in just a few moments' time. We're counting down to the market opens. Stay with First Move.
CNN.
Welcome back to First Move. We've just heard the opening bell on this Monday morning, Cyber Monday. Of course, here in the United States too. And it is a stronger open for stocks as anticipated, though I should point out we've still seen steep losses over the past 5 sessions in particular. The S&P falling 3.5% last week too in what was just 3.5 equivalent sessions. Still down for the year for the Dow and the S&P 500 too. And data shows for the S&P 500 currently at its lowest valuation since early 2016. How long before people start to look at this and say, hey, these are great levels to be getting back in? Depends what you're buying, I guess. Let's look at the individual movers that are driving these markets this morning. Facebook, as we were just talking about earlier, British Parliament, of course, obtaining internal documents that the company had fought to keep private amid a lawsuit alleging disregarding user privacy, and obviously again a further criticism of data use of Facebook too. Right now up some 1%, but it's been what a challenging few sessions for Facebook amid a broader tech sell-off. Campbell Soups also up, reportedly nearing a deal with Third Point to end the contentious battle that they've been having over board members and the future direction of the company. What will that mean, of course, going forward? GM also higher, set to announce it's cutting North American car production, may also shut down assembly plants in Canada. Sources say it comes as focus shifts further to autonomous vehicle technology. Amazon also in focus in the session. Investors appearing confident about Cyber Monday. It is expected to be the biggest online shopping day in US history, up 2% in the session, but again been under severe pressure over the last 2 to 3 weeks in particular. Let's get some context now on Cyber Monday. Charlie O'Shea is the lead retail analyst at Moody's. Great to have you with us.
Great to be here, Julia.
It's expected to be a record-breaking Cyber Monday for online sales, but I know there's been some computer glitches already over the weekend, so how severe have they been? Can you give us any detail?
Any glitch is severe this time of year, so let's get that on the table.
Yes.
J.Crew's had some choppiness. Lowe's did some things over the weekend as well. It's a nice problem to have if you're having it for the right reasons. If you're just being overloaded and nobody can anticipate the demand, that's okay. If you're a lower rated in our world retailer, you haven't been able to spend and invest in these things because you've got other stuff you have to pay for. That's where the problem lies. And a lot of the retailers that really need good holidays are in that camp.
Yeah, so they just haven't invested in the technology and they don't actually benefit to the extent that they should, and compared to some of their competitors.
Exactly.
I mean, we call it Cyber Monday. It's a huge day for online sales, but also for in-store. Can you give us a sense of what the split is? Is it predominantly online, or does it also see an impact on stronger bricks and mortar sales too?
It depends on how the consumer wants to buy the product. If it's a buy online, pick up in store, obviously you got to have the stores, and that's where the brick and mortar guys have had the big advantage. Our estimate is online sales are about 15% of total retail sales, meaning brick and mortar is 85%. That proportion will hold up during the holiday, but you'll see more online volume on days like today, days like Thursday. Thanksgiving Day was a big online day. The brick and mortar guys have stepped up their games to compete with Amazon. Amazon is no longer competing just against an isolated brick and mortar retailer. They're competing against everybody, and it makes it tough.
You see, that stat for me is quite illuminating. You said 15% is online, 85% is still effectively in a store, so bricks and mortar. I feel like when we talk about the growth and the strength of e-commerce, we kind of forget that store sales are still a critical part of sales for these companies.
Oh, when we speak at conferences or talk to investors, our team, we'll ask that question. What percent of online sales are there in the U.S.?
And they get it the other way around.
A lot of people do, especially those that live in New York and live in big cities and are at the upper end income demographic, because it's disproportionate that way. But you have to remember the vast majority of the population is making less than $50,000 a year. So they're going to be going to the stores.
So the strength that we're seeing, and I repeat, we are expecting to see a record-breaking day for sales today. Is that because consumers are confident, because we're starting to see wages coming through, or is it the sheer level of cutting prices, of discounts, of deals that are out there? Because I was saying earlier on the show, I was bombarded this weekend with, go online, you can get another 30 on top of another 15%, and it's all of them offering this. So at some point that has a detrimental impact on margins for these retailers, like Kohl's, like Macy's, that so far in 2018 have done pretty well.
We focus on operating income in our place, not revenue. We did put out a revenue forecast, but We will wait to see how much money actually goes in the bank as opposed to how much goes out the door.
Right.
And you're definitely on point. Promotions this holiday, we expect the promotional activity to be acute. I said this last year, it was the most promotional year I'd seen in 15 years. I think I'll say the same thing. Yeah, it sounds like a broken record, but I think you'll see that again. And the challenge for a lot of the smaller retailers, I mean, let's be honest, you're in the middle of a price war between Amazon and Walmart right now, and there's a lot of ripple effects permeating throughout retail. If you're a retailer that competes with them, you have a decision to make. Do I want that sale or do I let it go? And I use limbo as my kind of, benchmark. If the bar gets too low, you can't get under it. You have to get out of the game. And a lot of retailers don't do that. They'll sell $1 for 99 cents.
Right.
That's not sustainable, obviously.
So what you're saying is actually, and we've seen this time and time again, that Amazon can continue to squeeze margins. They can actually offer a higher minimum wage that we've already seen in this season too. And actually, it hurts them in the short term, but what they make on volume results in crushing some of their competitors because they simply can't compete, particularly when there's free shipping, which is something else that's been thrown in as well.
Right. Amazon's biggest advantage, and we've said this a lot, is the shareholders are very patient.
Yeah.
They haven't worried too much about profits so far. No other retailer has that benefit, so it makes it competitively difficult. Free shipping is just another promotion, but Amazon has been able, because of those shareholders, to absorb. I'm estimating Amazon will absorb $15 billion in shipping costs this year, with the lion's share of it in the fourth quarter because of Prime and everything else.
Do you think this is the last Christmas for Sears in particular? Because for some of the most weak players in the US market, everything that you've just said says to me, it's kind of the end game.
There are several retailers that we look at that need really good holidays, and I'm not just saying competitive holidays, I'm saying really good holidays to get to the other side. Sears thus far has been able to pull multiple rabbits out of multiple hats over time.
Yes.
Maybe it'll happen again, but the company is in Chapter 11, and this is critical for Sears to get through the holiday to see whether it actually does survive.
Make or break. Charlie, fantastic to chat to you.
Thanks.
Thank you.
Great being here.
Lead analyst for Moody's there in retail. Right, coming up, hoping to make a sale on Cyber Monday, British Prime Minister Theresa May trying to get her ministers and the public. Welcome back to First Move, and let's get the latest on Brexit now. The UK Prime Minister Theresa May is due to address the British Parliament shortly. That's after the 27 remaining members of the European Union endorsed her Brexit deal. However, getting it through the House of Commons is likely to be slightly more challenging. Lord Dickie Jones joins us now in the chat room. He's a member of the House of Lords. He's the Brexit-backing former Director General of the CBI and a former UK Trade Minister. So fantastic to have you on the show. Thank you for joining us. The message from the EU this weekend was that this is as good as it gets. You're not going to get better. Do you agree from the EU side that they've done all they're willing to do here? And do members of Parliament need to believe that when they go in to vote on this deal?
I think the second part of that question, you're absolutely right. I think MPs and indeed members of the House of Lords, because they have a vote as well, they do need to understand that for all of the inside the bubble, inside the Westminster bubble, you'd call it the Beltway, inside there, we can talk about it till the cows come home, but at the end of the day, there is another party to these negotiations, and they've said that's as far as it'll go. Where I do think that something might change is that the dynamic of Europe is that Germany owns it, Germany runs it. There's nothing wrong with the Germans. I mean, they're fabulous people, they're a damn good country, but nevertheless, they pay for it. And the golden rule, he who's got the gold makes the rules. So when you see 27 countries, yes, they're doing what Germany wants. Now, on that basis, if Merkel, for one moment, the Chancellor of Germany, thought there was not going to be a deal because there's something in the agreement that can't get through Westminster, she would be so much more tempted, is that the right word, certainly prepared to change things than she would have been 6 months ago, because now she is basically coming to the end of her tenure. Germany's economy is in downturn the last quarter. The next quarter, if there's another downturn, we get a recession. And she'll have the auto manufacturers of Stuttgart with Mercedes and München with BMW and Wolfsburg with Volkswagen saying, you've got to do something about this because we can't have Britain, which is their biggest market. It's 4 times bigger than America. It's twice as big as China. Little Britain, 4 times bigger than America for cars made in Germany. You can't have them going out without a deal and going into WTO. And so she will, I believe, at the end of the day, blink. But not yet. And if you look at me, I would say, and I'm a Brexiteer, but I'm not an ideological one. I just want my country to plough its field in Asia's century around the world and not just belong to a trading bloc in Europe, but I want to be really good friends with Europe. Now, on that basis, someone like me would say, as you said in your introduction, this is as good as it gets. We got a lot of stuff out of this, which I don't think people thought we would. But the one thing that I will have a problem with is that last little thing to do with Northern Ireland called the backstop. If we haven't sorted out the Irish border in 2 years, then we move into a situation where the European Union can say whether we finally leave. And I don't accept that, because that's not voting to leave now. But the rest of it, I would say, this is as good as it gets. Get voting.
So where does that leave us? Because the risk of testing Germany in particular here is that the UK crashes out of the EU without any kind of deal at all. I appreciate that you're saying that the Germans would blink here, but there's a risk in testing that. Are you saying that you're willing, at least at this stage, to vote for this deal in the hope that actually in the negotiating period and the transitional period, something can be agreed that actually protects the border between Ireland, obviously, and what we see right now? Is that the solution here, and do you believe this deal will pass?
It's quite interesting. Until yesterday, my answer to that would have been yes. Because I would have said, let's vote for this deal. That little bit about, at the end of the day, if the Northern Irish question isn't sorted, then it goes into transition and backstop, and then the EU can say whether we can go. I would have said what you just said. I'd have said, do you know, in those 2 or 3 years, while that works up, something will work out, it'll be good for everybody. But yesterday, Macron of France, in his press conference to the French people, said that one of the conditions of Europe letting us go would be that we surrendered our sovereignty over fisheries. And fishing in Britain is, island nation. I mean, it's hugely political. It's something that really did great with Britain for 43 years, was that the French and the Spanish could plunder our waters. And so you've got a lot of fishing communities, even in places which voted Remain, the fishing communities voted Brexit. Scotland in particular, a good example, Cornwall another. And so if you've got France now saying, well, we'll let you go at the end if you give up your fishing, believe me, I don't trust them anymore. And up till yesterday, I'd have done what you said, but I'll go and vote in 2 weeks' time, and I'll vote for no deal if we haven't sorted out that little bit of EU consent with the backstop. If that's sorted out, I'll vote for the deal.
Do you think this vote's going to fail, Lord Jones?
I don't think there'll be no deal, because it's not in anyone's interests. It's a little bit like right at the start of this 2 years ago, I said there'll be no tariffs on manufactured goods in either direction. Why? Because it's in no one's interests. Because you're starting at zero tariff. When I was Trade Minister, it was all about trying to get tariffs down. Whereas this, you're starting at zero, so why would you try and get tariffs up? So I don't believe that it's in their interest or ours then, and I don't believe it is now. No deal works for no one. And on that basis, I think there will be a bit of give and take. But the big thing, MPs, members of Parliament, democratically elected, they've got to be aware of the tyranny of Parliament, because by and large, it's 75-25 Remain in Parliament. And of course, they're looking at something where the people were 52-48 to go. And so on that basis, they've got to somehow say to the people of Britain, I want to honour what you democratically decided to do, but it's not in favour of what I want to do. And you could just have a tyranny of Parliament in this, which would be a constitutional crisis. And that, I think, will bring a lot of MPs, if not to the table, at least saying, flex this little bit and I'm with you. And I therefore think that the boat that will sail will be a deal, it won't be no deal.
Yeah, we'll wait and see. Lord Digby Jones, thank you so much for joining us, and come back to us in a couple of weeks' time when that vote goes through, please. Great to have you with us.
I certainly will.
Right, let's bring you up to speed with today's boardroom brief. Mitsubishi Motors has ousted Carlos Ghosn as chairman. The move follows his arrest last week over claims of misconduct. The company says Ghosn can't do his job right now, that Nissan is no longer endorsing him. Mitsubishi's CEO will take over as interim chairman. GM was expected to make a major announcement on North American production Monday. It's believed the car giant plans to shut down its historic Ashwanda plant in Canada, putting thousands of jobs at risk. GM is shifting its focus towards electric and autonomous vehicle technology. Elon Musk says there's a 70% chance that he will move to Mars. The SpaceX CEO told Axios on HBO that he wants to go to the red planet, even though there is a, quote, good chance of death. Musk also talked about his electric car company, saying Tesla came very close to going under over the last year. They're coming up on First Move, despite Elon Musk. Welcome back to the show. A quick look once again at how we're trading this morning, with US markets opening higher after suffering heavy losses last week with the Thanksgiving holiday, of course, too. As you can see, the Nasdaq higher by some 1.4%. More broadly, tech, energy and the financials are all adding to the gains here. 4.5%, just shy of 4.5% losses last week. Also in focus as well, the FANG stocks, the likes of Facebook, Netflix, Google, also beginning the week higher, as you can see, after some pretty challenging weeks. Amazon also higher by some 2% too. Let's get some context here. Joining us now is Whitney Tilson. He is a hedge fund industry veteran, and he joins us now. Great to have you with us.
Thanks for having me.
The market's showing some cracks. That's your words.
Yes.
Put it in context. Are you looking at this market? Should investors be looking at this market as actually now back to valuations we saw in 2016 and an opportunity to buy, or are there just too many risk events out there actually to jump back in?
Well, I'm more of a bottoms-up stock picker, so I try to stay away from big macro calls, but there's a little bit, investors are rediscovering the risk side of the risk-reward equation. A lot of things to be nervous about, from trade wars, potential trade wars, to rising interest rates. And, we're 10 years into a bull market. It's, I suppose, not unexpected to see a little bit of turbulence.
Yes.
Investors are trying to figure out where the market's going to go. All I know is that from a bottoms-up perspective, I'm finding a few more cheap stocks. It's not a great environment for value investing, but there are more cheap stocks out there.
You know, it's interesting. Late last week, we were talking about stocks to be thankful for, and some of them like Merck, like Pfizer, the pharmaceutical companies, some of the big utilities as well, they've still seen great gains year to date. Do we have to look at this market now and be acknowledging the fact that we are in late cycle? Actually, we have to get over it and look at value stocks rather than the classic growth stocks, the techs that have done so well up until mid-year.
Yeah, the problem is the defensive names you've mentioned, some of the consumer names, pharmaceutical names, they're not really value stocks.
No,
they're still trading, 20 times earnings or more.
Right.
Investors are just rotating, I think, a little bit, perceiving that as defensive, but when you're rotating into something that doesn't have much in the way of growth prospects, trading, paying north of 20 times earnings, I'm more actually looking at the FANG stocks, and they're incredible companies, and I think companies like, Amazon, Google, Facebook, all three of which I own, I think they're all pretty good bets to double their revenues in the next 3 to 5 years. There's still a lot of growth left in these companies, and they're now trading at sort of market multiples. So that's actually more interesting to me, buying beaten down stocks down 20 to 40% than rotating into popular defensive stocks.
Facebook, we have to talk about that in that regard. I mean, all sorts of challenges. We've been talking about it again. You believe they've got a handle on the big issues? Is that too bold a statement?
I won't go that far. I think they've been almost reckless and irresponsible in building what is, with 2.2 billion monthly average users, it's larger than China, it's larger than any organized religion in history, and they just sort of blithely went out there and assumed that everything would be fine, and now we've realized it's been used for political manipulation, for genocide in certain countries. So Facebook is going to have to make a very heavy investment to start policing what they've built here, and I think that's the right thing to do. But at the end of the day, they've got the world's greatest business model. It's only 1/3 the size by revenues of Google. It's 1/6 the size of Apple. So I still think there's huge amounts of growth as they monetize their international customers, Instagram, WhatsApp. So eventually, I think they will get a handle on it. I'm not saying they have gotten a handle on it, but eventually I think they will. and there's still a lot of growth left in this company.
When you're talking about the business model very quickly, you're talking about advertisers spending money with Facebook rather than some of the challenges perhaps for users. And until that breaks, it's still a good business prospect.
Right. Well, if you think about it, it's the world's greatest business in the sense that it's that the users create all the content. So Facebook doesn't have to pay for content, unlike Netflix, for example.
Yes.
It can scale infinitely at almost no cost. So if you think about 2.2 billion users is a lot. On the other hand, fewer than half the adults on the planet Earth right now have a smartphone, are connected. I think over the next 5 or 10 years, a few billion more.
We are going to come back to this conversation in the future. That's it for the show. You're watching First Move. Time to make yours.